All right, now individuals who like investing in short-term government debt instruments such as treasury bills, right? Right now you have realized that the rate of treasury bills has gone down. For example, 91 T-bill has gone down up to 9.5%, right? I think 181 days T-bill has gone down to around 10%, 10.7, 10.5% around there, right? And 365 T-bill has gone down to around 11.5%. I think these rates are like that. Now, we used to have a 365 last year, before the end of last year. I think hapo August or September hapo, August, July, this was around 16 to 17%. This one was around 15%. This one was around 14%. So they have gone down like this. Probably, and it's not probably, but this is going to have a negative effect to the investors. It's going to have a negative effect to the investors, because if I'm an investor or a certain bank was investing in these short-term debt securities, the reason why, because they normally have a high interest rate. But you realize if you are an investor and you are investing in these short-term debt securities, it's going to affect you negatively, such that it will force you to look for other alternative means to invest your money, where you're going to get a larger interest rate or a good return other than what is being offered by the Central Bank of Kenya or what is being offered by the government. Now, but that is not what I wanted us to discuss. I wanted to explain something to you on what it means by reduction of treasury bills from 16% to almost less than 10%. What does it mean? What effect does it have to the economy of Kenya, looking at the bigger picture? Is it a good sign or is it a bad sign? What do you think? And that is what I wanted to discuss today, or to explain to you, so that if you are there thinking that now the treasury bills have gone down, now I think the economy is crashing, and you might be telling yourself such question. And that's why I've come to tell you, on the other side, it's going to affect someone negatively. So that is an investor who was getting the 16% interest rate. But to the economy as a whole, it's going to be a good sign. And this is how it is going to be a good sign. So, ladies and gentlemen, in normal cases, when government needs money, is going to borrow money. When governments need money, it's going to borrow money. And one of the major sources of income of government is through borrowing. Not talking about tax and other things, the charity and whatever. Borrowing is one of the biggest, because government borrows to do projects, to do infrastructure, to do what. By there, as we talk, there is an infrastructure board that was just launched the other day, a 14% infrastructure bond, and it is tax free. This one is not going to be taxed. It is tax free infrastructure board. So if you have a those CSD account and you meet the minimum requirements by the Central Bank of Kenya to purchase this infrastructure bond, you can go to the Central Bank of Kenya website, look at the minimum requirements for you to have this, and then you can be able to. This one is a very good deal, by the way. I think the government is looking for money for infrastructure or something. So I was explaining something. So the government is going to borrow money, and it's going to borrow money to fund its projects, the infrastructure, and so on and so on. So the government can either do outside. Number one, we have outside borrowing, and outside borrowing is where it's going to borrow money from other governments outside Kenya, foreign governments. It's also known as foreign borrowing. For example, the Euro bond. That one is outside borrowing. The second one is going to borrow local borrowing. Now, let's not talk about outside borrowing. We are going to come back to the outside borrowing. Now, when it comes to local borrowing, this is where the government is going to collect funds or money from the members of the public or from investors within the local the country itself. Inside Kenya, we have investors like banks, corporations, insurance companies, and so on and so on. It's going to collect money from local people. And how does it do that? It's now through those short-term debt instruments such as treasury bills. Now, when government puts the interest rate of the treasury bill to be T-bill to be 17% or 16%, then the investors, the local banks, the insurance companies, the corporation, the NGOs are going to see this as a very good deal, and they'll actually subscribe to these short-term debt instruments. That means they are going to take money to the government. So investors are going to take money to the government. This is money. So they are going to invest in these T-bills. And now, when investors take money, the banks and all those corporations, even you yourself as an individual, you are going to take money because you need this 16%. Because they are not everybody you are going to give at a rate of 17% and they pay in full, because the government is going to pay back the money. So when they take the money to the government, it means the investors, the lending institutions such as the banks are not going to, the rate at which the amount is lent to the members of the public or to small medium enterprises or these small businesses reduces, such that the investors or the banks can give money to the bank, to the government to subscribe to these treasury bills and bonds. Now, when the treasury bills and bonds go down, then these investors or the corporations or whatever, they are going to look for alternative means where they can put their money, or they can invest somewhere where they can get the same competitive yield of 16 or 17%. And that's why they are going to bring money back to the small medium enterprises, because the small medium enterprises, you as an individual, if you own a business, you are going to subscribe to the loans of the institutions. So they will leave the treasury bill, and when they leave the treasury bill, they will stop subscribing to this. But remember, there are people who are risk averse, people who are not going to take risks to invest somewhere else to get a high yield. They will still remain investing in government treasury bills, but they are counted. That means the rate at which the government treasury bills will be subscribed into will go down. Now, what will the government do? Because now the people are not, the investors are not giving the government money. The government will go back to outside borrowing. And this one is what is advocated. When the government is doing local borrowing, it's making the circulation of money in the economy become so low, because the investors are going to take money to the government. But when the government do outside borrowing, it means the interest rates of short-term debt securities has gone down. That means the investors are going to look for alternative means to invest, and the most alternative mean is the local individuals or the local SMEs, and that's why you're going to make sure that circulation of money in the economy has gone up. So it might be affecting the investors in a negative way, but looking at a bigger picture, the SMEs will have some money. Actually, you realize there is some increase in the circulation of money in the economy. So it's always good for the government to borrow outside than to borrow inside. When it borrows locally, actually the economy is not good. It's not going to be. You can relate in the case of 2024. The government was borrowing a lot in the local whatever. But when it comes to outside borrowing, the government actually borrows. What is the advantage of borrowing outside? Number one is low interest rates. Here we have a low interest rate. But when it comes to local borrowing, the cost of borrowing is very high and the interest of repaying the money is very high. That means even the government is going to incur a lot of costs here. So what do we expect in 2015 now that the treasury bills has gone down? We expect more circulation of money, improved economy. The government is going to borrow from outside, and that one, of course, is a good sign. So even if you see that the treasury bills have gone down, the investors are going to sort themselves. There are so many alternative ways of looking for money and investing where you can even get a yield of 17%. So hamfai kushtuka. No, actually what is happening, it's now making the economy improve, taking back money to to the people. Now, holding other factors constant, such as corruption and so on. And so, of course, we always have corruption, but let's just talk things